Hello guys, this is Damien from OrderFlow Chart. In this video I would like to talk about recent live trades that I took, okay, and why I took it, okay, based on OrderFlow charts and reading the actions of the participants in the market. In this case, I took a buy order. Okay, I took a buy order. Let me show it a little. And I would like to talk about the first step that I usually do as the location. Okay? So the first step I use is to look at location, because that is very, very important. Location is everything. Okay, in trading any financial instrument. So I would like to show you that first of all, this is Euro futures 15 minutes. The first thing that I made was an indicator with the volume profile. I took the previous day. Okay, I took the previous day, and the indicator draws for me the volume profile and what is called the low volume nodes, which usually are used by participants in any financial market for rejection purposes or even acceleration. Okay, but for example, previous day, yesterday, it was used for acceleration here. Okay, if this ball, okay, when you have the enough strength, okay, to break it up, okay, it will be eventually rejected. Okay, like this one. So these levels, this area, will be projected to the next day, in this case today, and look at how it responds when the price found some resistance and trading in a range. The price start going down and found this area of low volume node and immediately was rejected. Okay, but we know the location, but we don't know what happened inside this bar. Till now, with OrderFlow chart, we can see what's going on inside the bar. So if we can detect that aggressive buying is happening inside this bar or certain order flow patterns, we can take the trade with very little risk, because if the price went down and break it down, okay, the close is breaking down this area, it will be used as a resistance. So I'm not interested to be in the trade anymore. But anyway, what I'm pointing here is that we know the location. We know that this could be used as potential support, which actually did. But with OrderFlow chart, will be given us the second step on any trading strategy, which is the confirmation. Okay, so take a look let's going to take a look what is going on inside this one. Okay, but from the point of view of order flow. So this area between these two lines, this is the low volume node that we already saw in the previous chart. And this is the low volume now as well at this top, but we are interested about this. This is the bar, okay, which was rejected against that low volume node. Take a look at the buyers at the very low of the bar, okay, in green color. By the way, this is the second type of order flow, MT5 OrderFlow chart, which is the delta. Okay, it is still order flow chart, but this type is delta, which is the difference between buyers and sellers. So it's telling us that as soon as it crosses down the low volume node, the bias appears here with green. But even more important, of those lines, it says 77 buyers and 56 buyers, which means at some point in time and sales, 77 buyers get into the market, into the exchange in just milliseconds. It is a very strong indication that this market is not longer weak, because it was in this downtrend, right? Now, it found support here, and we have to take a look at the next bar. The next bar, okay, it closes above it. It was an up bar, but even more important, based on our order flow analysis, is that we have on this bar, which is controlled by bias, as we can see here, okay. This bracket means the POC, or point of control, where the most volume activity happens on that particular bar, okay. But the next bar, which confirms the strength, because it was an up bar, but even more important, the point of control is above the previous one. And that is what I was waiting for to enter the trade. Okay? That was the first opportunity to go long. The risk is very little, because the stop loss will be a few points below this area, below those buyers. Those buyers are there to control the market and start doing what they do. It's starting to move the price up. Okay, till we found this low volume now here at this bar with very aggressive buying. Okay, there was a lot of buying here, but those buyers usually are the retail buyers. At these levels, they're bought at the worst possible price level, because they bought against a low volume node. Okay, and what is more important, that this bar was confirmed the weakness, and that is why the prices retraces again, is that the next bar, the POC, or point of control, was lower. Okay, and it was rejected by this low volume node. That is why the price comes down here, generating that retrace to exactly the same area of low volume node. Okay, at this time we can see this bar, okay, with the point of control, okay, and sellers start getting into it, okay, but those sellers are probably unaware that they are selling against a very strong support. And what is even more important and confirm the strength is that next bar, the POC, point of control of the next bar, was higher, and that confirms the order flow pattern to go long. And there is where I bought 10 lots here, and as it reaches this, it was just 9 points, okay, 90. It was 90 points the risk, and I will go for 2 to 1, 18 points. Now, once it reaches 1 to 1, which was at this point, at this price level, horizontal blue line, okay, I immediately moved to break even, like in this case. So I am in a free trade now.